In the YouTube video titled Starting a Content Agency Business Structure, Taxes, Write-Offs, and Paying Yourself, Full Guide, Cam Meunier, a video creator and owner of a content agency, and his accountant Dylan discuss the essential considerations for entrepreneurs embarking on the journey of establishing a content agency. Dylan emphasizes the paramount importance of judiciously selecting the most advantageous business structure for their specific circumstances. He provides a comprehensive analysis of common business structures, including sole proprietorship, partnership, LLC, and corporation, highlighting the distinctive tax implications and legal ramifications associated with each choice. He advises entrepreneurs to refrain from formalizing their business until they achieve a consistent revenue stream, recommending a single-member LLC as an optimal starting point for freelancers. From 0 minutes to 5 minutes of the video, Cam Meunier explores the diverse business structures available and their tax implications, particularly within the context of video production enterprises. He emphasizes the crucial role of aligning the business structure with the individual's financial objectives and operational requirements, highlighting the potential benefits and inherent disadvantages of each model. Cam emphasizes the advisability of commencing operations as a sole proprietorship or single-member LLC until a stable revenue stream is established, providing a pragmatic foundation for entrepreneurial ventures. From 5 minutes to 10 minutes of the video, Cam and Dylan delve into the intricacies of deductible business expenses for video production companies. They elucidate that the Internal Revenue Code, IRC, permits deductions for any expenditures deemed ordinary and necessary in the pursuit of generating income, encompassing a range of expenses such as software, website hosting fees, CRM, camera equipment, travel expenses, studio rentals, and even professional coaching or consulting services. Cam cautions against the common misconception that any expense appearing in a video automatically qualifies for deduction, citing clothing as a frequent misinterpretation. Dylan underscores that the burden of proof rests with the business owner to substantiate that expenses are genuinely business-related, highlighting the potential ramifications of failing to provide adequate documentation in the event of an audit. From 10 minutes to 15 minutes of the video, Cam and Dylan embark on a detailed exploration of the tax ramifications associated with employing independent contractors versus full-time employees for video projects. They emphasize that the determination of contractor or employee status is not solely within the purview of the business owner, but is contingent upon the fundamental nature of the working relationship. Dylan elucidates the key distinctions between these employment models. W-2 employees typically adhere to defined work hours, are exclusively contracted to the employing entity, and receive matching contributions from the employer for self-employment taxes. In contrast, 1099 contractors possess the autonomy to set their own work hours, can work for multiple clients simultaneously, and are solely responsible for paying their self-employment taxes. Cam posits that for video editing services, engaging independent contractors generally proves advantageous until the business expands to a larger scale. From 15 minutes to 20 minutes of the video, Cam and Dylan provide a detailed discussion of how to track and document business expenses to optimize deductions. They highlight the crucial role of maintaining separate business bank accounts, emphasizing the importance of maintaining distinct financial records for personal and business transactions. Dylan advocates for this separation even when the individual is unable to afford a professional bookkeeper, recognizing the value of organized financial management. The discussion then transitions to the importance of capturing photographic evidence of receipts, particularly for significant purchases and business meals. From 20 minutes to 25 minutes of the video, Cam and Dylan provide a comprehensive overview of the tax implications of hiring independent contractors versus employees. Dylan clarifies that the determination of contractor or employee status is not solely within the purview of the business owner, but is contingent upon the fundamental nature of the working relationship. Cam inquires about the appropriate employment model for his senior editor. Dylan explains that they made him an employee because his role is more defined and hourly based. The other editors that work under the senior editor are contractors because their work is more project-based. Cam reiterates the tax advantages of paying contractors versus employees, as the business owner is not responsible for matching the self-employment tax. From 25 minutes to 30 minutes of the video, Dylan provides a comprehensive explanation of the process for structuring compensation as a business owner to minimize personal tax liability. Dylan explains that most business structures operate as pass-through entities, meaning that any net income earned by the business is directly reflected on the owner's personal tax return. To effectively minimize tax liability, entrepreneurs are advised to maximize legitimate business expenses, either through deductions or by judiciously adopting an S-corp structure. From 30 minutes to 32 minutes of the video, Cam and Dylan delve into the tax implications of hiring independent contractors versus employees. Dylan explains that most of the time, the nature of the working relationship determines if someone is a contractor or an employee. Cam inquires about the appropriate employment model for his senior editor. Dylan says they made him an employee because his role is more defined and hourly based. The other editors that work under the senior editor are contractors because their work is more project-based. Cam reiterates the benefits of paying contractors versus employees from a tax perspective, as the business owner is not responsible for matching the self-employment tax. Cam acknowledges the importance of tracking and documenting business expenses properly to ensure that they are deductible for tax purposes.